For the first time in Edinburgh's June sunshine, a chance to catch up at the UK's largest event focused on pension fund investment. The pensions landscape has seen seismic changes since we were last here, these 3 days offering ample opportunity for more than 800 delegates to evaluate those changes and navigate a positive path forward in this, the centenary year for the PLSA.
The world of pensions is much bigger and much more complex than it was 100 years ago.
What are some of the big topics this year and how important is it more now than ever that we address those expediently?
Well, Sharon, there's 42 different sessions at the investment conference, so we've got a lot to cover, but clearly cost of living crisis, macroeconomic conditions are absolutely vital for pension fund investment. Equally, regulation and government initiatives are so key, and we need to make sure that everything works in the best interests of our savers.
I like what I call the economics of walking about. And the economics of walking about is asking people, talking to them and seeing what they say, what do markets say.
And those macroeconomic conditions are more fragile now than they've ever been. After a turbulent few years, investors are now more risk averse. There are more geopolitical concerns, inflation is escalating, and the climate agenda is high on everyone's priority list.
The big thing is that uncertainty in the world has been rising and is going to continue to rise. I mean, we've seen uncertainty in the past about the oil price. It does seem to be coming down. Think about house prices. Is this a good time to buy a house? Probably not. So obviously people are going to say, we need to calm things down, we need to get back to normal, we need to stop this craziness.
This was a story about the risk of acrylamide. Acrylamide, you burn your roast potatoes, and the Food Standards Agency was going to have this campaign on don't burn your roast potatoes because you'll get cancer.
COVID highlighted to us all the pivotal role that statistics about risk plays in establishing what is going on right around the planet in these volatile times. Numbers and stats are constantly used to inform or persuade us, but how do we decide which to trust?
We're bombarded with numbers on social media and mainstream media, advertising all the time. Most of them trying to persuade us to do something or to think something or buy something. And so that's why knowing which statistics to trust is so vital. And what I do is, rather than starting with taking the number apart and working out exactly is it accurate or not, first thing I look at is who's telling me this.
Earlier this year, the government and the regulators consulted on a new approach to assessing value for money in pensions. Clearly, there are implications for DC investment, particularly within the wider context of the government's illiquid assets and consolidation agendas.
Value for money is absolutely the right direction of travel. Maybe has the wrong focus in where it's being applied. But we need a way for people to make informed decisions, and that helps with that. Illiquid assets is a longer term debate, and that's actually about pension schemes having scale and having the routes to market to actually use illiquid assets.
We also heard the view from the government about paradigms for a new investment climate, changing expectations for LDI, about TCFD, and a new DB funding code. Panellists also discussed modern investment design for modern decumulation. We heard the views from asset managers, and about how pension funds can act in the public good. On top of all this, there was an abundance of opportunities for socialising.
Coming out of the pandemic, we were all thinking, surely we're going to get back to stability again.
Of course, we all know that there's a general election coming, likely to be next year. How is the result of that going to impact our unstable economy, our growth, our public services, our pension funds? Ed Balls, what are some of the biggest challenges facing a new government in terms of the economy and pensions?
Our country is gripped by a cost of living crisis. People are really under pressure, makes it much harder to save for the future when you're struggling to pay the bills week to week. People's wages have not been rising for some time. The economy has not been growing for quite a few years now, back into the late 2000s, with the pandemic and other things which have happened, the war in Ukraine, the global financial crisis. Our national debt is much higher. So finding a way to keep the economy and the fiscal situation sound, get the economy to grow, and also do so in a way where most people feel that they are getting better off and they've got a bit of spare cash to save as they need to.
Although there are some disagreements among economists about what the new sustainable rate is, it is definitely not more than 1.5%.
The past 12 months have been something of a political roller coaster. With that election on the horizon, this could have a significant impact for investors.
The challenge for any government is to find the resources to support public services. They will all be desperate, whoever wins, to get the growth rate up, which puts pension funds in the firing line. They control this enormous pool of capital. Any government will be looking to pension funds to support growth. Pension funds will be asked probably to do things they are not necessarily comfortable doing.
The PLSA, helping everyone to achieve a better income in retirement and making connections and sharing experiences at a fantastic investment conference 2023.